Hello and welcome to our video on tax policy and wealth distribution, analyzing the effects of UK tax policy on wealth inequality. In this video, we will be discussing the relationship between tax policy and wealth distribution, and analyzing the effects of UK tax policy on wealth inequality. Wealth inequality is a growing concern in many countries, including the UK, where the gap between the rich and the poor has been widening in recent years. Tax policy is one of the key tools that governments can use to address this issue. Our aim in this video is to provide you with an overview of the UK tax policy, the current state of wealth inequality in the UK, and to analyse the effects of UK tax policy on wealth distribution. The UK tax policy. To understand the impact of tax policy on wealth distribution, it is important to first have a basic understanding of the UK tax system. The UK tax system is composed of various types of taxes, including income tax, corporate tax, value-added tax, and others. Income tax is the most significant tax in the UK, generating around 2/3 of total tax revenue. Income tax is a progressive tax, meaning that the more you earn, the higher the percentage of tax you pay. In the UK, income tax rates range from 20% to 45%, depending on your income level. There are also tax brackets which determine which tax rate applies to your income. Corporate tax is a tax on the profits made by businesses. In the UK, the corporate tax rate is 19%, which is relatively low compared to many other countries. However, businesses are also subject to other taxes such as national insurance contributions and value-added tax. Wealth inequality in the UK. Despite being the fifth largest economy in the world, the UK has a significant wealth gap, with the richest 1% owning nearly a quarter of the country's wealth. There are several factors contributing to wealth inequality in the UK, including the income gap, inheritance, property ownership, and differences in education and employment opportunities. Wealth inequality has significant consequences for society and the economy. It can lead to reduced social mobility, increased poverty, and lower economic growth. In summary, the UK tax policy plays an important role in addressing wealth inequality. Understanding the UK tax system and the current state of wealth inequality is crucial for analysing the impact of tax policy on wealth distribution. Analysis of UK tax policy on wealth inequality. Tax policy can have a significant impact on wealth inequality. The progressive nature of income tax means that it can reduce wealth inequality by redistributing income from higher earners to lower earners. However, the effectiveness of tax policy in reducing wealth inequality depends on a range of factors, including the tax rates and the progressivity of the tax system. In recent years, UK tax policy has become more progressive, with an increase in the personal allowance and a reduction in the top rate of income tax. These changes have increased the progressivity of the tax system, making it more effective in reducing wealth inequality. Overall, the impact of UK tax policy on wealth inequality is complex and depends on a range of factors. It is essential for policymakers to consider the effects of tax policy on wealth distribution when making changes to the tax system. To further illustrate the impact of UK tax policy on wealth inequality, let's take a look at some case studies. Case Study 1: Analysis of the impact of UK tax policy on high net worth individuals. High net worth individuals are those with a net worth of over £1 million. They are often subject to different tax rules than the general population, including tax reliefs and exemptions. Changes to the UK tax policy in recent years have affected high net worth individuals in different ways. For example, the reduction in the top rate of income tax has benefited high earners, while changes to inheritance tax rules have made it more difficult for high net worth individuals to pass on their wealth to future generations. Case Study 2: Analysis of the impact of UK tax policy on low-income earners. Low-income earners are those who earn less than the average wage in the UK. They are often more reliant on government support, such as tax credits and welfare benefits. Changes to the UK tax policy, such as the increase in the personal allowance, have benefited low-income earners by reducing their tax burden. However, changes to the welfare system, such as the introduction of the universal credit, have had the opposite effect, increasing poverty and inequality. Case Study 3: Analysis of the impact of UK tax policy on small businesses. Small businesses are an essential part of the UK economy, providing employment and driving economic growth. Changes to the UK tax policy, such as the reduction in the corporate tax rate, have benefited small businesses by reducing their tax burden. However, changes to the VAT system have increased costs for some small businesses, leading to calls for reform. In conclusion, tax policy plays a crucial role in addressing wealth inequality. The UK tax policy has undergone several changes in recent years, with some aimed at reducing tax evasion and avoidance, and others aimed at increasing tax revenue. While these changes have increased the progressivity of the tax system and reduced the tax burden for some, there are concerns that they may have also increased wealth inequality. To reduce wealth inequality effectively, policymakers need to consider the impact of tax policy on different income groups and the economy as a whole. The use of a combination of measures, including tax policy, is necessary to address wealth inequality in the UK.